Okay, so you're ready to buy your first share of stock. You picked out a company that you want to buy, and now you have to tell your application, whatever that you're using. Most of the time, I'm using Robinhood to buy and sell my stock. You have to tell the application how to buy the stock. The standard way is just to use a market order during stock market hours, which are 9:30 a.m. to 5 p.m. Eastern Time, 8:30 a.m. to 4 p.m. Central Time. So during those hours, if you say, okay, I want to buy one share of ABC company, it'll just buy that company one share right at the time that you execute the order at whatever the price is at that moment. It won't try to determine if the price is high or low. It'll just buy it right then and there, as long as there are shares available. Now, if there's a specific price that you want to pay for a certain stock, say $100 a share, you can tell your application through a limit order the exact price that you want to pay for this stock. Let's say ABC company is getting close to about $100 a share. It used to be 110, but it's taken a dip recently. You're thinking, okay, I wouldn't mind paying $100 a share for this. You can tell your application through a limit order, give me 2 shares at $100 a share. And if the stock price goes down to 100, it'll execute your order and purchase it for $100 a share. And you can do the same thing as well when you're selling. You might put in a limit order right away to say, hey, sell the stock again for me if it goes back up to 110. Go ahead, capture this gain and get your profits. The next way is if you say you want to buy a certain stock while it's trending upward, you're just starting to see the trend and you want to catch it, you can do a stop order and tell your application, buy ABC company if it gets to this price, such as say 105. You saw it at 100 and it seems like it keeps climbing, but you want to, catch it on the upswing. You don't want to catch it while it's going down. Then you do a stop order and your trigger price or stop price will be set above the current price right now. Now, if you've seen the price go up a couple times and then it comes and dips back down, you might be thinking, okay, the next time it does this, I want to do something when it comes back down to buy it at that lower price. So what you can do is use a stop limit order, and what it will do is it'll set you set a stop price that's higher. That way, if it goes up to that price, such as say ABC company hits $110 a share again, the stop price you might set at 110, and you might tell it, place me a limit order at 105 if the stock price hits 110 again. That way, if it hits 110 and takes that dip again and goes down to 105, that'll be the price that you buy it at. Now, the last buy order type, which is actually one of my favorites, is a trailing stop order. The way you would use this is you would tell your application, hey, while ABC company's price is going down, I want you to give me a price. You can say $1 to $5 above, or you can tell it a percentage, 1% above. I prefer to do dollars because it's just easier for me to keep track of the price in dollars. So while ABC company's price is dropping, I want you to set a limit order $1 above that, and I want you to keep changing that and make it lower if the stock price keeps going lower. Now, the benefit of that is, say ABC company is at $100 a share, it goes down to 99, 98, 97. It's not going to buy that share of stock until it goes back up by $1, because that's the gap that I set for my limit order to stay above the stock price. So if it keeps going down, say to 90, good, because my limit order price is being changed by the application automatically, so it will keep going down. So if the stock price hits 90, my limit order would be 91. And whenever the stock decides to turn back around and go up again, it'll buy my stock $1 above, which would be the $91. Versus had I did a limit order at 97, thinking that was the lowest it was going to get, I would be buying at 97. But using a trailing stop order, I can have Robinhood keep changing my limit order for me automatically. I don't have to watch it. It'll do it for days, months, whenever. It'll just keep following the price of that stock down until it rebounds and starts to go up again. And you can also do the same thing when you're selling. You might tell it, okay, while the stock is going up, you already see it at a kind of high price, but you don't want to quite sell yet because you don't know if it's going to go higher again. You can tell your application, okay, give me a limit order $1 below the current price. While it's going up, it'll keep changing your limit order price for selling up, and it'll stay $1 below your current stock price. And when it goes and dips down that $1, that's when it'll do the limit order and sell for you. So that's a good way to end up selling your stock at the highest possible price versus just setting a limit order and you just guess what the price could be and you just set it at say 105 and hope it sells at 105. This way, if it goes up to 110, 112, 115, when it takes that $1 dip, it'll sell at say 114. So these are your standard market order types for buying and selling. And there's probably some more complicated versions out there, but for the most part, you want to stick to the things that are basic and the things that you can understand until you become a little bit more advanced, and then you can start kind of using these in different combinations.